Hello, folks. Hope you're doing well. Welcome back. All right, so we're going to go through a brief little review here. I'll give you some opinions about what I think is likely to occur going into this week and the weeks thereafter. And hopefully, I'll give you some encouragement along the way. So, let's take a look at the dollar index first. All right, so here's the dollar daily chart. And you can see the buy side that was taken there. We pulled that back down into this inefficiency and used this as an inversion fair value gap. So you can see that there. We also seen this act as an inversion. So I have a volume imbalance here. And look how nice it was used there. So we have another run up into this high here. So we have another run up into this high here, likely. So that's the liquidity it took. So we had this high, this high, this high, and that bumped it. So now I'm looking for a much more pronounced run through this. And then the next pool of liquidity for dollar would be up here. Okay. So obviously that would set the stage for lower prices on euro dollar and pound dollar. So let's take a look at those now. All right, here's the euro dollar daily chart. And as you can see, we had buy side taken there, trade up into an inefficiency there, sold off, and we're looking for a run below here. Here. So there's your relative equal lows where sell side resides. So let's take a quick look at this. So we had buy side taken here, inefficiency traded to there, inversion fair value gap used there and here. The body started respecting this one. So once it left it on a closing basis right there, we want to see it stay inside. It can wick right there. It's a tiny little mohawk, I call it. And heavy distribution. We have a sell side imbalance buy side efficiency below the inversion fair value gap. So now rips up back into this fair value gap, just about the consequent encouragement level, and then dives down here. So we have this pool of liquidity, this low, this low. So we're looking for lower prices going forward on euro dollar. Let's segue over into pound dollar. We're looking at the pound dollar, and you can see we had buy side taken there, small little inversion fair value gap there, broke lower, and now we're looking to make an attempt to get below this low. And while this is the initial draw, I expect it to go down below here. So that would look like this. Inversion fair value gap, used consequent encouragement, the low of it here, sold off, closed below the inversion fair value gap there. So it respects consequent encouragement. The body stay inside of it. It's allowed the mohawk, that's okay. Then we break lower. So we're inside this. I expect this to act as an inversion fair value gap. So should we trade lower, we should treat it as a premium array and then attack that minor sell side and then the more prominent sell side liquidity there. Let's take a look at the crude oil market. So as I mentioned, stay away from this market. Otherwise, you're going to get beat up pretty bad. And we have a volume imbalance there. They utilize that as an inversion fair value gap. And we have this low minor sell side. This wick right here, let's grade that real quick. See that? We close below it. That's indicative of likely seeing it try to draw down and clear that wick's low. If we weren't unable to close below the consequent encouragement level. See, look at the close here. Look at that close. 87.76. And that's lower than 88.25, which is consequent encouragement of that wick right there. Okay, this one. So we'll be looking for it to roll over and trade down below that low. Um, I'm not confident enough here to say we'll likely take out that low because this was a stop hunt. And to me, I suspect that crude oil is going to go higher. Nothing's really changed over in the Middle East, and our media isn't as honest as it should be. So you got to be real careful and just either know people outside the United States that have a better boots on the ground perspective, or you know take a lot of skepticism and apply it to what we see in our news. One minute we're bringing an end to the conflict, and now it could last for 3 more months. So it's ridiculous. But this market's going to be affected greatly because of that. So unless you like to be at a carnival or you like amusement rides and you like to play yo-yo with your finances, then have fun, have at it. But it's an event-driven market, and I told you to stay away from that. I say a quick look at gold. All right, so here's gold, as I mentioned. You want to keep your hands off of that, and we've seen it trade up into an inefficiency. I told you if it was going to go higher, it would use this as an inversion fair value gap, go higher. It simply just used it as a premium array. We broke lower, and now we're selling off. This wick, watch this. See that? 4,320. If we close below that, that's a strong likelihood we'll take out that low and this low. So this is the potential. I'm not going to call it yet, but it certainly looks like if we can close below this price here, which is half of this wick, then we'll look for the sell side here, and then acceleration below that would take out that low. Okay, so heavy distribution in here, and then pretty much punishing anyone that wants to believe the gold hype that it's going to go straight up. It's just like tulip mania. TULPIP. I'm sorry. TULIP. Tulip mania. Okay, a long time ago. Just do a search on it. You'll see what it is. And that's what just pretty much, this is what's being seen here. And then we had the Hunt Brothers debacle type gameplay I told you they would do. And then there it is. Okay, so we're looking for a draw lower on gold, and we'll see if that in fact manifests itself. Let's run over into silver. As you would expect, silver's doing similar things here. We have this sell side liquidity pool. So if we see continuation on the downside, there's our next objective. It's basically 58, we'll call it 58 on silver. Should we accelerate through that price, we're going to quickly take out those lows, and we start working in here. Okay, they want silver below $50. I'll just let you know that right now. They want it below there. So again, same type of thing here. Hunt Brothers, they put the brakes on it, sent it lower, raised the margin up so high, nobody can really afford to trade it, and then worked it lower to bail out the bad boys that made a mistake of being short. It's a rigged game, folks. It's a club, and you ain't in it. And then we're going to go take a look at Dow. Here's the Dow. So what I'm looking at here is a potential capitulation high, running out the old high here, because this looked convincing. Everybody wanted to be short. And then I told you in Twitter Spaces that as we enter into May, because we're going to have a new Fed chair, once we take our targets, which were the low targets, March, April timeframe, when we were bearish on indices, I said we would likely see it have an extrapolated run to the upside. And in Nasdaq, take out its relative equal highs. And we got that, and we'll see it again when we go to the NQ. But here, it looks like we have done the business of creating 3 highs. So we have high, high, higher high, and then giving up the ghost. So watch this level in here. This could present itself as an inversion fair value gap that could be used to lend for lower prices. So let's park this right here for a second and check and see if there's a volume imbalance between this close. So 40 and the open on this one. Nope. So it's wick the wick. We'll wick the body, to say it that way. So if we get below that, this could act as an inversion fair value gap to dig into these relative equal lows. And then this sell side liquidity pool and inefficiency. And then we'll see what we get in regards to, let me see, it looks, yep, there's your next sell side. And then a little bit of excitement below that would take that one out. So I'll stand on that for right now. So short term here, if this uses the premium aspect of my PD array. So if it goes below, it comes back up, treats it as a premium array, starts to sell off. Then we would look for this, these, this low, that low, and then pretty much, Armageddon in. If it can do that, I'm not that overzealous right now. All right, let's take a quick look at ES. Okay, and I gotta tell you, between YouTube and X, it's starting to feel like controlled opposition. Okay, and I'll leave it up to you to decide whether that's me being facetious or being honest. Okay, I could care less what you believe, but I know when I'm trying to get messages out, and sometimes they're hindered, sometimes they're held up. Like X sometimes will fail to send a post, and I'm grinning, looking at the chart periodically, thinking they're watching it transpire. Look at it, it's going right where I said I was going to go, and then come to find out the tweet never was posted. So while I did have a lot to say about what you should have seen and what you see in the chart here, it didn't make it to X. So we'll just leave it at that. Okay, we'll just say that I didn't get the message to you, and that's okay. Okay, that's okay. But we have relative equal lows in here on ES. Okay, so granted, it's not much in terms of, it might even open below that on Sunday. Well, today is Sunday, isn't it? I'm a little jet lagged. We have a buy side balance, sell side efficiency. I would like to see that. Should we get below it, I'd like to see this act as an inversion fair value gap. I got to fix that. That's not on the right price. There you go. So I'd like to see it get below this, treat it as inversion, and come back down lower. That looks a little suspect there, and just happens to be the old high. So that's a point of interest right there. Trading down. Now, the classic support and resistance cult, they'll see that as going down there to go long and make new all-time highs. I don't subscribe to that view. Should we trade down to that, I think we'll dig into these inefficiencies and then work towards probably an animated summer where we could be going lower. If you recall, I mentioned in the past how the United States 401ks would eventually be fleeced. And I got laughed at. I got people, I get laughed at all the time because they're completely ignorant. They have no idea what they're talking about. But they feel smart because they've watched something or they heard someone else that they like their opinion. And I'm going to be diametrically opposed to 99% of you. But I can promise you this. Ask yourself where everybody's money is right now. If they have money in their bank account, they're looking at their 401ks to bail themselves out. I have friends that have been doing it. So if this government was as corrupt as some might suspect they are, wouldn't it be reasonable to anticipate them stealing from that cookie jar while it's good and fat at all-time highs in the marketplace? Think about it. Now, I'll just say this. Private equity, do some research on that, okay? That's all I'm going to say on YouTube. But the bailouts always tend to happen for them, but you can't get a bailout. You can't get a bailout. So we're looking for how we trade here and this big sell off in here. If we get below here, do we get back up into this? Maybe, maybe not. Okay. So if it were to go up into that area, it could do this. It could revisit this volume imbalance because it was created to the upside. We traded down, smashing right through it. So if it starts to retrace back from, say, it takes out these lows, it trades up, hits that, then I would anticipate that acting as a premium array and see some weight in the market again to trade lower. This is all capitulation, folks. Okay, this is all capitulation. There's only a handful of stocks that have made this happen because they're being driven by big deep pockets, and the majority of issues in stocks are not really showing the fundamental reasons behind something like this. And as I mentioned, it's capitulation. That means everybody's being led into the slaughterhouse. This is a Judas. Okay, make everybody think it's just. It got everybody saying the same thing. The mantra was and has been for the last couple months now: the market only goes up. The market only goes up. Well, now you're all brainwashed. So you get this on a Friday, complete washout, and bada bing, bada boom. Now you're left with, well, it's a healthy retracement for a bull market. Okay, we'll see. But just be mindful, okay, because we could be seeing unexpected things, as I told you, violent volatility, things that are going to be probably shocking, okay, and it's going to have an impact on the markets, whether you want to believe it or not, whether you think you're exempt from it because you live in a different country. If you trade these markets through a CFD, if you trade these markets through a broker that allows you to trade that, you're going to be affected. And it doesn't matter what your foreign perspective is outside the United States. Okay. I'm not thinking with an American perspective. I'm thinking of it as a smart money perspective. The haves are getting ready to take more from the have nots. And that's what you're about to witness. Okay. Let's move on over to NQ. Same bit of business here. Well, you can see all the annotations. We'll take all that stuff off. We don't need to see that. You've seen it when I was showing the executions. So right here we have relative equal lows. That's a message that never got to you. Same business here. Volume imbalance to wick low. We want to see this, or I should say, I want to see this. Trade through it and then treat it as an inversion fair value gap. If it trades back up into this range here, this big sell side imbalance, buy side efficiency, this is where I would like to see it stop if it was going to retrace into it at all. There's a little bit of a caveat there. Old high right in here, we could look for a run into that, and then retail would see that as a return back to resistance broken, turn support. I don't subscribe to that view. Okay, so if it's going to go back down here, it's going to go lower, and we'll dig into these inefficiencies, which could become a inversion fair value gap as well. Okay, and I think that is going to be it. I kind of lost my mojo. I wanted to talk about some stuff and maybe have a little bit of a long-winded heart to heart with you, but when my momentum's stolen from technology not working with the way it should, I just lose focus and I lose my rhythm. So it takes me a little while to get that back, and we'll see what happens this week. I'll be interested to see how we open later today at 6 p.m. Eastern time, and then what we see there. If I have anything that's noteworthy, I'll tweet it out from my X account. I will do my best to have a Berean study posted by 5 o'clock today. And I think I'll have some time to spend with you on Monday and Tuesday. My wife's left. She's flown to the West Coast, so she's spending some time with my daughter. And that gives me opportunity to, be the guy you're used to hearing from. Until I talk to you then, Lord willing, Be safe.